Africa loses $50 billion per year in tax avoidance activities by multinational corporations. Uganda being one of the countries where multinationals control a significant portion of the market, the taxman is joining forces with the Africa Administration Forum to rein in on the vice and mitigate its cost.
The practices by multinational enterprises that work in Africa that try to, as much as possible, reduce their tax liabilities through aggressive tax planning, treaty shopping, and erosion of the tax bases. And so we thought that it is not possible for individual countries to address these multinational enterprises singularly.
Officials contend that the effort will involve formation of a legal counsel network to act as a beacon of tax litigation and advisory services within African tax administrations.
We know legal functions are playing a very critical role in furthering the core objectives of tax administrations of revenue generation, because through successful litigation, they generate significant funds that are needed by the tax administration, and also by virtue of being able to detect illegal activities, they deter further illegal activities by those who would like to evade paying their rightful share of taxes.
The synergy will also allow for communication because more often than not, African countries face the same challenges when it comes to tax administration related to multinational entities.
Because many of these multinationals operate subsidiaries in the various countries, and therefore the information that are provided maybe to a tax administration in Uganda may not be the same information provided to a tax administration in South Africa or in Mauritius or in indeed any other African country.
This came up at a workshop for legal practitioners from across the continent that was aimed at discussing mutual agreement on tax matters on the continent. Ingrid Nantege, NTV Business.